Very, very excited. The crypto market is on sale right now. Mm. Ah. Mm. So what does that mean? That you should be out getting it while the getting's good, shopping. It's almost like we're just bargain shopping. It's a garage sale. It's cheap, and I'd like to talk about why it's cheap and what makes all these cryptos or these coins undervalued, so to speak. So DJ Khalen's back. The Figgy ones and two Meister. DJ Khalen's back. Look at him. He's moving the ones and twos. So what we're gonna do, we're gonna move on down, scroll on down. We want to compare the world's money markets. Now here's the problem with the world's money markets. There's no transparency. We truly don't know what they're really holding. We really don't know what's in the vault. I mean, technically, there is a lack of trust. Now, give me 1 second as I hit my Hennessy. I had to have a drink tonight. It's going to shock a lot of you. Oh, I'm serious, hysterical. Now, in front of me, a lot of you can't see it, but on the cameras, they see I've got a money tree. And it's an actual money tree with money on it. And the one thing that I was taught when I grew up, that money doesn't grow on trees. And that's actually a big misconception because all money is fiat. It's just paper that actually does grow on trees. You can pretty much take it and buy goods and services and use it as a medium of exchange. But the biggest challenge that we're facing right now is that it keeps losing its value. And why? Well, we know quantitative easing. We also know due to the manipulation as far as the shares of stock that they are maybe reported in terms of what they can issue. And then there's the trust. We lost trust. All right. So as it stands, let's talk about the mess that's been created. All right. So I want to put on a video, very, very special video. DJ Khalen, go ahead and hit him with the ones and twos.
How much money have humans created? A staggering amount. So much that simply telling you probably won't convey the magnitude. In this visualization, we're going to show you just how much money exists in the world. But first, let's start small. The median household income in the United States is around $54,000 per year. This is enough to own a car, and perhaps even a home. However, as you will see, in the grand scheme of all the world's money, it is quite minuscule. Let's look at the top 1% of earners instead. To make it into this elite group, annual household income needs to be about 8 times higher, at least $430,000 per year. But of course, even that is still nothing compared to the wealth accumulated by top celebrities and business people. For example,
Yeah, it would make more sense if we had the volume. Give me 1 second, you guys. It's very important you see this because we're talking about the mess that we've created. So the video hopefully this works this time. No volume? All right. Oh, no worries. I guess we'll just do the visualization, which is our backup. All right. So look at silver. Now, I love the fact that silver happens to be up here at the top. Now, why? Why would we put silver at the top? Well, silver is one of the most devalued assets, or undervalued assets, shall I say, on the world, on the planet. Okay. Um, that was until we've seen cryptocurrency and crypto assets come on the scene. They're better known as digital asset arrays on a digital asset platform. These crypto assets are extremely cheap right now because most people don't know about them. So the demand is really not there. We've seen the demand explode over the last couple of months or few months, but the demand is what drives an ecosystem, supply and demand. Now, here's the biggest difference between cryptographic assets, or these crypto coins, so to speak, because you see the next section under here, cryptocurrency. There's a max supply. And they've got an audit trail. Okay, they use cryptographic auditing. Okay, and I'm going to talk about that in a second as we move forward. But for the most part, you can see that silver represents 17 billion. Okay, the value of all above ground silver. Okay, the price right now. I'm going to check it as I pull it up. Alan, you can pull that up for them. It actually is about 17.05, so around 17 bucks. Okay. So now, as far as the crypto market, it's a lot higher than 100 and what is that? 160 some billion, 200 billion. It's grown a lot higher than 200 billion now. I believe it's at about 536, 540 billion. Go to Bit Screener at the second tab, the cryptocurrency screener, or Coin Market Cap. Either way, either one didn't matter. Let's see here what we got. Just want to give you guys an up-to-date number. Excellent, 527.7 billion. So it's grown. Let's go back to money visualizations. So if you look here, you can actually see it's almost about half the size of the biggest companies, so to speak, at the 800 billion mark. But the crazy part about it is cryptocurrency, the market in about December of last year, it almost reached just under the size of the world's biggest companies. Okay, this is the Apple of the world, your Googles, Berkshire Hathaway, etc. Now let's talk about the next section here. And what I love about it is the visualization. You can actually see what it looks like in comparison on a scale next to each other. So going up to the top, Bitcoin being the one that happens to be orange. Then you've got the rest at 45 billion black, and then Ethereum is blue, but it's actually changed. Now, the rest of the market is bigger, and Bitcoin's dominance is now about 36%. That's not a bad thing. It's just showing that there are more currencies, more cryptos coming in to this space. So as a result, it becomes more balanced, and that's kind of why you see Bitcoin's price starting to kind of teeter off a bit as it loses some of the market share to the other coins. And it doesn't mean that Bitcoin will always be king on the hill. Another coin could very much well dethrone Bitcoin. You never know. That coin could be Ethereum. It could be a Litecoin. Who knows? All right. But for now, Bitcoin as a single currency, its market cap happens to be the largest if we take the aggregate total as far as the market cap. Now, if you scroll down a little bit, look at the 50 richest people. Okay, they've got 1.9 trillion. That is trillion with a T. That is Musk, your Zuckerberg, Gates, okay, Buffett. They've got a lot of money in terms of the common folk, so to speak. But this doesn't account aristocrats or royalty, so to speak. It's funny because they don't put them on here. But you can see that they represent just under 2 trillion. Okay. Now, that's a lot of money in comparison to the crypto market. Okay, if they were wanted to, they could turn around and buy out the whole crypto market. Okay, you see that there? That these gentlemen right here combined could literally cause the crypto market to collapse if they wanted to go in and take all of their capital, so to speak, and bet against it. But the only challenge is that they could very much go bankrupt themselves because the market happens to be so liquid now. The liquidity is growing. And it's the same thing that we're seeing with what happens in the financial space today, and what happened in the past with our Bear Stearns and our Lehman Brothers. As the market grows so much and they take these bets on these risky derivatives, and the trades go against them, it becomes very hard for them to meet their margin calls as the trade unwinds, and they end up being liquidated on their positions, and they end up being not only bankrupt in their positions, but completely bankrupt total as a company as a whole. Well, moving on down to California. California's GDP. Okay, California's GDP, 2.9 trillion. Okay, this is America's most populous state, and it's funny because they were thinking about creating a new California, new California. But again, I want to show it to you as a visualization so that I can show you how much trouble we're in and how cheap crypto is. So keep in mind, you get to see what crypto look like as far as a market cap. And then we'll understand where things are going, and I'll show you where I'm going with this, okay? So Fed's balance sheet, yes, $3.5 trillion, okay? And this was just added during QE, okay? So that means between 2008 and 2014, the Fed's balance sheet jumped by 4.5 trillion. Okay, this is from 1 trillion due to controversial quantitative easing, the remainder just from just different bailouts and things that they've done to bail themselves out from their own bad bets on risky derivatives. Now, currency, speaking on coins and banknotes, total value of the world's coins or banknotes, roughly they're saying $7.6 trillion. Okay, not bad. How do we know it's accurate? Let's see. Can we go in and ask the Federal Reserve or JP Morgan Chase to open up their books and actually go in and give us the actual numbers and have an audited statement? They'll claim it's audited, but at the end of the year, last quarter, okay, everything else is just compiled statements. The end of the year is when they're required to give the audited statements, and that's pretty much when everybody's bought in on the hype. The problem is right now is they're lying to us. They don't tell us the truth. The Fed auction, the U.S. Fed auction is the only auction that has never, we're a nation that has never had a failed bond auction. That means we've always been able to have our bonds sold at auction. Why? Because if no one buys them, which these countries aren't buying them anymore right now, guess who buys them? We do. We buy them with our own fiat money. We've been doing it since 1971. We got off the gold standard. Nixon took us off the gold standard. I'm not here to get too deep into all the extra skedaddles and Allison's Wonderland. We're talking about crypto here, and this is an hour of crypto. So you're probably wondering how it relates to crypto. And what assets can I get into, Ringgold, to go in and trade crypto? But that brings me to my next section here, gold, the world's gold. The world's total above ground gold reserves, they estimate about 187,200 tons. Now, by the World Council, might I add, this is their account. Now, COMEX is not going to give you all of the actual total of the gold that's in circulation above ground, but most of the gold that is being bought by the Eastern nations as they are trying to hedge their bets against a lot of the worthless paper they're holding that I was going to say we, but it ain't me. It's the United States government and the people that are in seats of government and power that are really just shoving them worthless piles of dong. Yes, that's Vietnamese dong. You heard it right. That's a fake laugh. Now, so what does that mean? That means as soon as you find things go to cryptographic hard assets, it's a wrap for the fiat. This stuff is backed by nothing. It has no transparency. Ficky DJ Khaled, hit him with the ones and twos. Hit him with the ones and twos. Scroll on down just a little bit. Stock market. Yes, global stock markets. The market's capitalization of all the world's, remember, this is all the world's stock market is 73 trillion, and there could be manipulation there. We represent about 38% as the United Kingdom, is roughly about 5%, UK 11, and then you got 17% in the Asian area or the Asian continent, where 10% is China, 7% Japan, and then the rest of the world. So the most of it is proportioned in the US, and then Europe, China, Japan, and UK. But that's 73 trillion. Now, remember, Bitcoin or crypto is just a small little splat, a small little dot compared to the mess that we've created. Do you remember? I talk about it, and I've been talking about it for time and time again. A bid price for anything is only valued at what someone's willing to buy it for. That means something can go to zero bid if there is no demand for it. Cryptocurrencies, coins, and tokens, you can't sell something you don't have, and you can't double spend. Yes, this is true. Now, go ahead and scroll on down. Let's talk about the global money supply, the fiat. Yes, the fiat. Woo! That's big, large. That's a lot. The problem is the market's getting away from them. The reason Bear Stearns collapsed, Lehman Brothers collapsed, Countrywide collapsed, is mainly because the market was too big. Their bets went bad. They could do nothing, so they had to collapse. It's like gangrene. If my arm is suffering from gangrene, I might as well cut it off before the rest of the body suffers. All of these banks and institutions owe each other. Okay, they loan money to each other and turn around and give each other favorable terms. If one can't meet a margin call because they've made a bad bet on a risky derivative, well, they have one of their buddies from another bank bail them out. And if that doesn't work, sure enough, Paulson or someone from the Fed or Geithner, because that's who they were dealing with now. Now, oh, my bad. It's Munchkin or Munich. I call him Munchkin. They just go ahead and turn on the printing presses and start quantitative easing to take care of their screw-ups. Now, wouldn't it be nice if we had our own quantitative easing machine? You do. You have me in the Block Traders Corner. I'm going to show you how we can do this by turning our trading terminals into quantitative easing machines. Closest thing you've got. And that's why they try to stop you from being able to access Dcoin. Yes, in my community, we call it Dcoin. It is Dcoin that changes their lives. Do you have Dcoin? You may find yourself one day in a back alley looking over your shoulders. Yes, you got it. It's right here. It's in the bag. It's right. So don't reach. Dcoin. Why? Because one day it will be in limited supply. You bet your bottom dollar or your bottom coin, that is. So let's talk about this money. Narrow money, the total value of the world's money, it's easily accessible. Okay? It is easily accessible. I'm sorry, I said that wrong. That is easily accessible is 36.8 trillion. Okay? So this includes the world's coins and banknotes, and I don't mean those intangible coins, okay, that you can't touch, hold in your hand, or physically take. Okay, the intangible ones, all right, as the crypto, not the actual metal coins. So also including banknotes and checking deposits. Now, broad money, this is the total of the world's money that includes coins, banknotes, and then money market accounts, as well as any savings accounts, time deposits. This is about 90.4 trillion. All right, so the non-physical money is about 92%. The actual physical is only 8%. This is where we're in trouble because most of it is not physical, which means it can really be manipulated. You ever heard of fractional reserve banking? That's what makes it, very skewed. Imagine if you played poker with me and I have an unlimited pot of money you're just going to lose because all I have to do is just keep making bets. In fact, every bet happens to be a good bet. Every trade, every investment is a good investment because I can't lose. If I lose, I just turn around and make the taxpayers pay for it. The thing is, how they pick up and figure it out. Moving on. Scroll on down for me, please. Global debt, developed markets. Debt, systemic risk, leverage. Ooh. We're not even talking about the off-balance sheet transactions, the special purpose entities where they used to hide the thing. Remember the Panama Papers? Yes. The Panama Papers, they were hiding lots of money, all while tracking you. Do you know what the government spent last year to track blockchain assets and to see where your money's going? Why? Because taxes are big for them. Freedom to fascism, taxation without representation in this nation is just ludicrous. But we allow it. Why? Because we're using their system, we're using their money, we have no choice. Unless we move outside of a system that puts the power in your hands and doesn't require permission for you to send value anywhere. So, we recently seen $400 billion of Tether go into the crypto market. Why Tether? Because it's stable, it doesn't fluctuate. And that Tether came from fiat. All they had to do was just go in, borrow money, and then use the Tether to front run us in the market after they push fear with this imposed regulation. How can you regulate something that you can't touch or feel or manipulate or extort? If there is no centralized authority or location or person to bribe and manipulate or corral, then there's not much you can do about it. You have to play the market just like anybody else. And that is the problem with crypto as it grows bigger and bigger. It becomes too big for them to turn around and to be able to manipulate it. So what they do, they play the market just like we do. But the problem is your dollar gets affected. Your dollar gets affected as they keep printing more and more. Right now, they're printing more dollars to be able to suppress the price of gold and silver, as well as the price of commodities. And, well, they can't suppress the price of crypto because right now there isn't much short selling in crypto because a lot of it is spot on cost. You don't really have the ability to trade leverage unless you're trading with a Poloniex or one of these brokers like BitMEX, where they do give you the ability to trade leverage and short the market, because you have people that are lending their coins on interest. Right now, the crypto market is in the early stages. It's too early for us to be able to have people be able to come in and let us borrow their coins to short this market. So you traders haven't even seen what it's like to be able to trade in a market when you got someone on the other side giving you some resistance or pushing an opposing force. Right now, everybody's bullish and gung-ho. So the total national debt, 215 trillion. Not total national debt, but the developed markets you can see here. All right, but total amount of the debt, including the accumulated governments and corporations and households together, this adds up to 215 trillion, so which is 325% of the global GDP. I mean, wow. 70 trillion of the world's debt, 33% was added in the last decade alone. In the last decade alone. That's because they have been printing more and more money to pay for their mistakes. So scroll on down. It's not just here, you have China as well. China's recently stopped using our dollar for trade, and they've stopped buying treasuries as well. Now they're using the yuan, and China and Russia are trading together without us in the middle. And why can we sit back idle and do nothing? Because China is like our parents. They own us. Hell, and we don't have the money to pay. We can't really pay anybody. That's why the government shut down right now. You keep trusting them. And they don't have the money to pay. Why? Because obviously the system is not working. So, speaking about China, Well, global debt is currently at a record highs, partially thanks to the sky-high expansion of the credit in China. Hell, China says, look, you're going to do that? We'll do the same thing. Problem is, they're late in the game. Why do I say that? Well, China turned around and gave us all this hardware for fiat notes that are worth nothing. And now as they turn around and start trying to turn on the printing presses, they're a little bit behind the curve. So they say, look, heck, we'll just take this credit, invest in anything, especially high risk derivatives. And a lot of these wealth management products, the WMPs, slap them off balance sheet, which this year they've been required. Last year they were required to start reporting some of that stuff. I'm sorry. This year is the year that they're required to start reporting some of this stuff. And when they're held accountable and they're required to start reporting, we'll get to see that these defaults will start to move to an alarming rate, because when you see a lot of the bad debt that they're invested in, it brings the ratings and the actual, the true picture of the company's financial situation right. Right now, they're starting to default, and as they default, who are they making pay? Well, the people of the people's the people of the Republic of China. Okay, the People's Bank of China are making the people and the citizens of China pay. Financial sector, very small amount. Government, the red, non-FinCorp, most of it there, a small amount household. Go ahead and scroll on down. Let's go to real estate. Talk about things that are actually tangible. Okay. Now, that is a lot. A lot. I mean, crazy. Look at the global real estate, okay? When I say a lot, I don't mean by global real estate. I'm speaking on the 75 trillion or 162 trillion there, okay? But it's nothing in comparison to the mess that we've created. So the estimated value of all developed real estate in the world amounts to about 217 trillion. Okay? So these are assets that will go on the asset side. On a balance sheet, you have assets and liabilities. Okay? They tried to put fiat currency on the asset side and derivatives on the asset side, but what if an asset, when it becomes non-performing, it becomes a liability? You really can't do much with it. Okay? So it's probably should fall off the balance sheet, respectively. Okay? Now, you can see below the black, it's at 21% of the world's total residential asset value in North America, despite the fact that only 5% of the population lives there, is the 162 trillion that we see. So Europe contains about 24% of the residential asset value, but only 11% of the populace lives in Europe. Now scroll down. Now derivatives, there we go. This is a low-end estimate for the derivatives. They're saying $544 trillion. Okay, I want you guys to remember these numbers because these numbers are very serious. Crypto is just at $500 billion right now. And what if I told you that all of this has to and will eventually go into tokens and coins? They're going to be forced to put it on a public ledger, an open source public ledger, where it has to become a cryptographic asset, a digital asset array on a digital platform, where there is a cryptographic audit trail where you can see everything. At that point, gold prices, silver prices, they have to skyrocket because they can no longer turn around and suppress the price by shorting it. They're the ones with most of the open interest right now, and they'll get their shorts handed to them when the price of gold starts to do a ring around the rosy on them. There's that Ringo. Yeah, baby. So what is a derivative? A derivative is a contract between two or more parties that derives its value from the performance of an underlying asset index or entity. So let's just give a quick second here. Let's just briefly pause because we got to talk about that. All a derivative is a side bet. They just came out with Bitcoin futures. And with Bitcoin futures, they're just a derivative that derives its price from the spot Bitcoin futures market. But how many of you knew that the CME doesn't own one or hold one Bitcoin? And if they did, it's not owned by them or held in any account that you can go in and take delivery on? Oh, it's crazy. Bulls are over there trading it. And if you are a trader in this market, you'll know that it has no liquidity, baby. It's illiquid. Spreads are crazy. It's like one person buying from one seller selling to one buyer. And why? Because no fool would trade in a market as manipulated as these markets are when you're supposed to be getting a benefit of having it be decentralized peer-to-peer. If I know my broker is inside the same market, he's going to front run me every time. In fact, you don't even have to check in his account to see if the money's really there. Hocus pocus. You thought I had the margin, but I didn't really have it. And you only know when he goes bust. But while he's winning and the getting is good, you're on the other end of the side of the trade and you get the short end of the stick. And if I was the broker or the bank, hey, you can't beat that with a pat. Every time he wins. So with Bitcoin, it is cash settled. It's not Bitcoin settled. And they have limit moves and circuit breakers because they know where Bitcoin's going to go because it has a max supply. And then don't get me started about the centralization. What happens when you take Bitcoin and put it on one central exchange, you idiots? You get rid of the non-centralization. And then you take away the fact that if I'm long Bitcoin and I get it right, you're going to turn around and pay me in something that is fiat with no value? Isn't that redundant? Why do I want Bitcoin in the first place? When I'm trading Bitcoin futures that are settled in Bitcoin, I have the ability to be long Bitcoin. I can also be paid in Bitcoin. Well, it's the only choice I have when I'm trading peer-to-peer on blockchain. I'm being paid in Bitcoin, and that Bitcoin is going up in value when I'm long. And when I'm short, I'm being paid interest to short the market. So the beautiful thing is understanding where we are and what crypto means to just commerce, period, investing. In 2008, we saw these derivatives create a problem for us because there were a bunch of ratings that were going out that were fraudulent. They were being paid, greasing palms here and there, and voila. They were coming out with these ratings, and then all of a sudden, what was known as good credit or AAA or just solid was just no longer trustworthy. So it becomes, who can you trust? Now, if we're in a world where in order for me to be able to bring goods to market or have CapEx to finance inventory or research and development to make that Tesla car or that new LED TV that saves energy or whatever it may be, that iPhone X, they have to pay money to be able to get the product to market, especially a new company that is just starting out. They don't have much money. And if they're managed by entrepreneurs that are intelligent and use good stewardship, they're not using their money. They're using OPM because they're smart, because it's an idea. You don't know if it's going to work. So with that being said, in order for them to be able to go to market, bring that product out, they get financing or investments. And those financing and the investments, they're strictly based purely on trust. Well, the market has seen trust deteriorate. You can't even trust governments anymore. So income blockchain, everything on a public ledger, everything, all for everyone to see with all rules the same. You can't sell it if you don't have it. You can't buy it if you don't have it. And there is no need for you to use a third party to be able to make sure that both parties are meeting their ends of the bargain, their covenants, or whatever they required per a contract. In our case, we've got smart contracts. So derivatives 544, scroll down. And this is futures contracts, forward contracts, options, warrants, and swaps. Don't get me started on the swaps. Okay? The swaps, the currency swaps. Okay? The carry trade, playing the interest rate differentials, okay? The rollover interest, the swap, that trade in itself is a trade that can fall apart on these banks because they've got a bunch of trade on swaps. But if you never have to meet your margin call because you can continue to feed the monster, it doesn't matter. I collect realized profits and interest paid daily. The unrealized profit ends up going and getting gobbled up by a big bank if they end up collapsing. The big bank knows that the Fed will end up pushing it to the taxpayers. This is correct. So the banks, they use huge amounts of leverage to attain these positions. And some of the derivatives, such as commodities, they're traded on regulated exchanges. And the problem is the exchanges are controlled by the same group of people. It is not peer-to-peer. These are market makers, not spot contract brokers or exchanges that are just providing and facilitating contracts between bidders and offerers, bid prices and ask prices. Yes, this is true. Some of you didn't know. So scrolling on down, keep moving. No, back up. We forgot to read something. It says, however, the majority of the derivatives are traded outside of exchanges between private companies and called over-the-counter. These are dark pools. Clearport has their own dark pools, and this, ladies and gentlemen, is where it gets nasty. Woo! You don't even know what's in these dark pools. And that's where hyperinflation, Zimbabwe times 10 will come in, and it'll be a scary situation when these money starts to come out of these dark pools and it's used to bet on derivatives as well as come in and buy crypto assets. And when that money gets unleashed into the crypto market, if you understand that crypto has a max fixed coin supply and we're under 1 trillion, go ahead and scroll on up again for me, big dog. Scroll on up. I mean down. I said it the wrong way. Down. There you go, right there. Collateralized debt obligations. These are CDOs. Remember the CBOs and the CDOs and the CMBOs and the CMOs and the CRAPSs? Yeah, that was stood for crap. Remember the credit default swaps, the two derivative types that are now infamous for the 2008 financial crisis? Now guess what they got? They got the BSOs. My bad, the BSTOs or the BTOs or whatever they want to call them. They're called bespoke tranche obligations. Problem is you didn't know that the person on the other side is really not obligated. You thought he was until he ended up defaulting and his check balance. Solvent. He was insolvent to begin with. How many of you guys are sleeping? The government shut down. They're telling you they're broke, but yet you keep running and filling up their banks instead of your e-wallets, you idiot. Instead of your e-wallets, you idiot. Maybe that sounds a little better. Ren and Stimpy. That's what you're acting like. Okay, let's scroll on down. So far, here we've reached on the low end 544 trillion. Now, DJ Callen, hit him with the ficky. 1.2 trillion, that number right there, quadrillion. 1.2 quadrillion. So, it says here on the high estimate, the value of all derivative contracts is a high 1.2 quadrillion. The truth is no one really knows the exact size because there's no transparency. But that's over now, baby. It's over now. I can't really sing. That's why I give you the game and the knowledge on the financial change and the change in your e-wallet, those coins. So 1.2 quadrillion. Just imagine where coins will be as far as the price of the coins when this thing ends up moving and shifting that 1.2 quadrillion from the US monetary system, the debt markets, the bond markets, okay, the equity markets, the currency markets, which is Forex, okay, and then it moves on over into the crypto markets, or shall I say blockchain, okay? View on derivatives. Many finance professionals consider derivatives to be a zero-sum game. They're zero-sum trades. There is a winner and a loser. That means that sums go from the accounts of those who are dumb into the accounts of those who have been professional and taken the time to gain knowledge to learn how to trade like a professional. Okay? So, with that being said, you can see the derivatives being a zero-sum game, they're just taking the money out of your account and putting into their accounts and then turning around and then making bets again with really no money. Okay? So the positives are the derivatives can be used to help allocate and take price risk out of everything, okay? Such as like corn, cattle, stock. If I want to harvest, corn, and I want to make sure that I can lock in the price, then I can use futures contracts for that. But the problem is when you start using them to misrepresent things and sell things you don't have, or buy based on money or margin that you really don't have access to, this is where things become a challenge and we run into trouble. Because right now the market's jacked up on steroids. There's lots of leverage. So it's systemic risk. So the point I want to make is, if we talk about where the market is going, every single market is going to have to move to a blockchain cryptographic audit trail. And what will be the pendulum shift? I used to say when China turns around, implements blockchain, and then pegs their currency to gold, but no. You don't need China anymore. Because the key thing about blockchain and this whole crypto space is the fact that it's non-government. We don't trust government. I really don't trust no one but myself, mainly because obviously we live in a jungle and we understand that desperate people do desperate things. And the moment someone's in a desperate situation, they will always put themselves before they put you first. So what does this mean? This means that as the real estate markets move to blockchain and having an audit trail, as the financial sector moves to blockchain and has an audit trail, and all assets move to blockchain and have an audit trail, there's no need for banks. There's no need for third-party intermediaries and these third-party financial institutions. They're done because it's all done by a smart contract that works on an if-and basis. Nice. So what do I recommend? I recommend that you turn around and you buy everything in sight, because you have no idea when it's going to explode. But when it does, the coins will turn into a Bitcoin times 10. Every coin will be priced extremely high. And you'll start to see that the decimals will start to go from the right side of the coin to the left side, as most of these coins have done as they've exploded in market cap. So I wanted to go to Iconium. Go on over to Iconium for me, Alan. I wanted to talk about some of the things, but hold on. I forgot. Hold it back up. Cam, Crypto 30, let's go to our baby. Let's talk about where we are as a whole.